Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 9th, 2016. This video will take a look at some short trade ideas, and this is the second video I'm doing today. I'll probably do another one. I have a few more long trade ideas. I already covered some long trade ideas in one video. And this is not by no means an all-inclusive list of the short trades that I'm watching. I'm also doing this in video format because these are unofficial trade ideas at this time. If any of these stand out, and they all, by the way, they all look good for trade ideas. And if any stand out, and the entry we're close to an entry, I may add those as official trade ideas. By doing video updates, it allows me to cover a lot more stocks, get them out to you guys, and you can then take ones that you like. You can replicate the charts. You can ask me questions, whether it's in the trading room under the comments section for this video, and I'll be glad to share my thoughts, expand on my thoughts on any of these trade ideas, as well as provide a chart with some targets, again, if you're interested in any of these. The difference is when I put up an official trade idea, number one, those are the trade ideas that I have the highest degree of confidence. They're also actionable and timely, meaning they're closer to a breakout point. There's a few that I may cover here that are close to triggering an entry, but the official trade ideas, the biggest difference is those are always followed up with, there's a post for the setup with detailed notes, one or at least one, sometimes two or more charts supporting the case, and then there's the follow-up when the trade triggers an entry, when it hits the first, second, or third targets. If there's multiple targets, there's follow-up posts. If and when the trade is stopped out, there's a follow-up post. So there's a lot more work, and by doing video format and having these unofficial trades, I can get a lot more out to you guys. And there's a lot of these unofficial trades that do great. Many don't pan out, and like any trade, the most important thing is a trade setup is only a setup until and unless an entry is triggered. A lot of these trade setups, almost all of them, are dependent on a break above support or resistance to trigger that entry. And until that happens, until and unless that happens, that's not an official trade. It's not an active trade, even unofficial. It's not objective until that entry is triggered. So I want to make that clear. There's a lot of setups that never become active trades because that entry point isn't triggered. And by taking those in advance, only when I have the highest degree of confidence that an entry will trigger, once in a while there, I'll go ahead and jump the gun and take a trade personally or put it on the site as an official trade idea. So with that being said, I don't want to, as I started the video here, I had this one on the list today. Earlier today, the stock had opened up and it was much higher and it offered an objective entry. It gapped up yesterday, put in this hammer type candlestick, and so far fell down. Now, I won't spend too much time on it because if it was a little higher, which it was when I started compiling this list and I had this chart up, I just realized this one's starting to drop. It would have been an objective short entry. When you see these type of gap ups with a hammer, or especially a doji, then you can short with a stop just above the recent high. So you would have had about 1 to 2% downside if stopped out, and your target would have been the top of that level where it broke out. This was resistance before down here around the 145 area, and that would have given you about a 7% profit on the trade. So again, a very objective entry. Now, again, my apologies, this was the first on the list, and I already had it typed up in the screen. I didn't realize the stock is starting to really move down lower now. So earlier today we had an objective entry there, but one to watch. Maybe it pushes back up to get an objective entry, or maybe there's a lot more. Sometimes if you set the stops just above the highs and this new breakout to new highs fails and this trend line's taken out, this one can really go down from there. So but not one of my favorite. Let's look at a few others. WTW, Weight Watchers, mixed bag on this chart. I noted down here some almost divergences. Yeah, we've made about an equal low on the RSI. Bullish divergence potential. The MACD is flatlined here, and I put a circle around the MACD because the MACD is now in bearish territory. It's below the zero line. The zero line, that dotted line, when that white line, especially when both are below, the trend is bearish. And when it's above, as it was here to here, the trend is bullish. So what happened is this one has been bearish. It really flatlined right around the zero line. It was a hair above, a hair below. And it's not clear separation on these lines, so I'm not crazy about this divergence. And On face value, it looks bullish because it is, somewhat of a divergent low. Technically speaking, it's a divergent low. You have a higher high here and the equal highs in the RSI. While price has made a slightly lower high. But what I'm watching for Weight Watchers is if it fails. This is pretty key support around 1065. Excuse me, but there's a reaction down back here in that recent reaction low from the other day, which really that's where it caught. You got to watch this. See, the gap was right there. This was the key level, 1065. It was defined by many more reactions as you go across that line. However, we had a couple breakdowns here below that whipped right back up, and we had this breakdown here. So now you have to wait till that line goes, and that's around 997. If and when that goes, you're looking at a gap backfill on this one. And that would also be pretty bearish because it would have taken out this divergence. And so again, one to watch. You can set an alert, which I'm actually going to do right now on a break above that line. And if so, then your target would be a backfill. You might find a little bit of support here, a little bounce on this previous reaction high halfway down. But I think once that gap's entered, there's a good chance it gets filled. All right, HL. I also have, I'll tell you, as I started out the long video, I started with a chart of crude oil, making the longer term bullish case. I'm not going to go too long. I want to keep this video relatively short, so I'm not going to put up gold and GDX. I've covered those in recent videos and static posts in the last couple weeks here. But I can tell you that we are looking at such a setup in the gold and silver stocks. We need that catalyst. We need that trigger. These guys have been at resistance long term. I'm not going to go into those charts right now. I've covered that before. GDX is at very long-term resistance. A lot of the big names are at long-term resistance levels, extremely overbought, and more importantly, just beautiful. This is just one of many. This is a silver mining, Helka mining, HL, and you can just see this steep rising wedge with so many reactions. I mean, this is such a valid trend line here. We have a lot of reactions on it, and the steeper and longer a wedge is. This is a rising wedge. Now we have divergence at the most recent high, and what you'll see is you want to watch, of course you want to watch GDX, and of course you want to watch gold and silver prices. You want to see those break support. They look like they've been topping out to me recently, but you need to see these break, and you can go through the individual components of GDX and SIL, which is a silver ETF, which I'll touch on here in a second, and you want to watch these trend lines break. Now, they all don't have the exact same formation. Some have broken down below their primary trend lines and are working now up within a what I call a sub or a minor uptrend line. But when you see them all breaking in close proximity, that's when the sell signal is there for the mining stocks. And you can go long dust because it's probably going to be a quick move down. I'm usually not a big fan of buying and holding the leveraged ETFs for more than just a few days. But in the case of a swift move down and a unidirectional move, just like this was a unidirectional move up, which means you would have done as good or even better being long nugget. You don't have decay when you have a strong trend like this. You have decay in a sideways range, and I know I'm looking at an individual stock, not an ETF, but just say this was dust or nugget. This is where the decay suffers. This is where you suffer from the decay, not here. These are unidirectional trends, and with a steep rising wedge, you break down, and my guess is these stocks will fall even faster than they rose, and you'll probably wipe out. I would say at bare minimum, HL's coming back to the 475 level. Once we get those solid sell signals, and you just can't jump the gun here yet because the trend has been too strong. But it may be close, and I just want you to be aware these are out there. Here's another one, like I just mentioned. This is another silver stock, and I mentioned some of these had an uptrend line which they broke, and that was a healthy correction. I mean, don't get me wrong, that was from the top to the bottom, that was a 31% drop, 32% drop. So you can see that the gain potential is huge on these individual mining stocks, or use the ETFs if you prefer not to trade individual stocks. So this is the wedge we're watching now. You can see it's confirmed with divergence, actually double divergence. Double means you had a divergent top right here, and now you have a second consecutive divergent top, even more steep negative divergence. And break of this wedge will probably bring this one down. My guess is to that 290 level right here, over time. All right, next up would be, what was that, EXK? Let's look at PBR. It's a possibility. I was bullish on this one before. I can't remember if we had it as an official or unofficial trade idea, or I was just watching it. These were targets that I had before. There is resistance up there, but if you look here, we have negative divergence on the MACD and the RSI as PBR wedges up. It's in this bearish rising wedge pattern. It's at resistance now, or right around resistance. Next resistance is up here at that former T2 level, and there's actually a level right here I should add. So one to watch on a breakdown there, especially if crude rolls over. In the long video I did, the first part one, I covered quite a few bullish crude setups. They haven't yet triggered their setups, and I specified in the beginning of that video whether or not those play out, especially for longer term trades, will depend almost exclusively on what crude prices do. If crude has put in a bottom and is going to continue higher in the coming months to years, those will be great long side trades. If not, even if crude is in a bear market, they still make for, as I pointed out, a lot of those have had tremendous bear market rallies, 30, 40, 50% and more. So these stocks are definitely tradable. Whether you're a bull or a bear, whether the primary trend is bullish or bearish in these stocks, you can trade these things long or short on these patterns. And it depends, of course, on your how active a trader you are, your skill sets. Are you able to swing trade, get in and out within days or weeks? And if so, you're looking at a breakdown here. Maybe there's some support there, but this one's probably coming back down to that 582 level if crude prices take another dive, or even if this pattern breaks down and crude holds up. This one might have gotten ahead of itself. All right, not too much. I don't want to spend too much time on that. That's not one of my favorites, but just one I wanted to point out. TCK Tech Resources Limited. You can see the picture on this one. The longer term picture was bullish. We had a downtrend line. It was taken out. We had a bullish falling wedge back here. This one must have been highlighted at the time. These are old notes that I had on the chart, or old annotations. And it broke out above that downtrend line, which I just zoomed out to a 2-day period chart, and we're back to a daily chart. Came back tested. So nice action from a longer term perspective. However, it's maybe a little too much, a little too fast, very overbought. You can see the persistent overbought readings over the last year. From the bottom, that stock has run 553% or so. So I'm just looking for a pullback here. This is a rising wedge pattern. There's the bottom of the wedge. You want to see a breakdown of that. An aggressive trader could certainly short here. If you look to the left of the chart, see all these reactions. This is a support zone, these two lines in close proximity. There's the bottom of the support zone defined by all these reactions. We have a gap right here and then some reactions up there. So, talking about an objective entry, you short here, you put your stop wherever you want it. I like to use at least a 3-to-1 RR, risk to reward ratio, meaning I'll risk $1 of loss to make $3 of profit. So that stock is at 1630 now. And let's say your target is, this would be the first target. Any of these lines on the chart are support levels or resistance levels. So you have, there's a 21% down profit target. So we'll call it 20%. Well, we'll leave it at 21. That's easy math. So you have a 7% stop loss, and that would take you up about right there. A little bit above, so call it around the 1730, 1740 area, somewhere around there, if you're targeting this level. And if you think this one has more downside, this would be your next target. That's about a 33% drop, so you might allow for a little bit bigger loss. All right, that's TCK. MRO, Marathon Oil. This is another one I was bullish on earlier. I believe I traded this one long earlier in the year. I'm not sure if we had it as an official trade idea or not. This was a bullish falling wedge pattern. Beautiful divergent low, double divergent low. You can see these lines here. You can make out this trend line. I have it, the color muted down. So we had double divergence, steep rising falling wedge, boom, powerful breakout. And it moved up, took out this other downtrend line. But more recently, again, it's a story of, maybe a little too much, a little too fast. We certainly had a, pretty steep rally in crude off the lows, but there's a 141% gain. We had a divergent high. You can see the negative divergence down here at this point. There was a rising wedge. Prices broke down and they're back testing. So as far as an objective entry, it doesn't get much more objective than this. A back test of a recently broken rising wedge pattern that hasn't played out to its measured target yet. So you short here. You'd say you put a stop probably above these recent highs right there. That's certainly objective, and you don't want to. It shouldn't be taking out the highs. Maybe it punches into the wedge. You could use a tighter stop if you want, on a daily close within the wedge. And then price target, I think would be down at least. Let's move this line down. That needs to be adjusted. I would say minimum target would be that 1180 area with a quite likely a move down to the 1030 area. Again, keeping in mind what crude is doing. You want to follow the crude charts, and as long as crude's confirming, if crude's in a downtrend, let's say you short this and crude, the recent bounce that we've had in crude is reversed and crude starts moving lower again, confirming this trade, you can stick with it. And if you notice bullish developments in crude, maybe you want to close this trade out at the first target. Just an example. All right, MRO, next up is USCR. This was a recent trade. We had this as a trade on the site. We hit the second and final target back here. And if I'm not mistaken, I added it. I don't know if I added it again or I put this here. I don't think I added that as official trade ID. I was considering it here. Maybe I did. I trade these a lot. I take trades that I don't always put on the site, and then I put some on the site that I don't trade. You can check it. It's easy to use the post by ticker drop-down box and see if we did. If it did, it fell just shy of that target level there. But this one's playing out not just on the daily time frame. This looks to me like a stock that is topped. We had a divergent high there when we had that short. We had another divergent high. Keeps making these divergent highs, and it just looks weak. It punched out to new highs here, and it couldn't hold those new highs. It's falling back down. More importantly is the weekly chart. What that tells me, we have this pretty well-defined downtrend line, which USCR is just flirting with now. And we have a pretty powerful divergent high here on the weekly chart, both on the RSI and the PPO. So that tells me this stock is most likely the tail end, or has probably already seen the tail end of its bull market. That's USCR. SXCP. This is, I'm going to show you this one, which is the LP, the limited partnership, and the counterpart SXC. If you trade these limited partnerships, you get that darn K1 form at the end of the year, which comes later than usually after most people file their taxes. But I just wanted to point them both out. This looks like a rising wedge. From this chart, it looks like it has a little more work to do. You do have a divergent high, and you also have some resistance up here around 1743. But if we look at its closely related cousin, SXC, SunCoke Energy. This is a corporation, so you don't have the K1. You see this double top high. You can see we had resistance here. It was that previous reaction low. We punched through it enough times for me to put a parallel, make that a resistance zone. So there's your resistance up there at the top around 822. So this one, you could short it here, or you can wait for a break of this minor uptrend line. And essentially what I'm looking at on this one, it's been in this trading range, this sideways trading range for a while now, right here. So you short the top of a trading range with a target at the bottom of the range, which is around 535. So that would be certainly an objective trade and a pretty decent move, even if you're just looking for a pullback there. That's 33%. So using an RR of 3-to-1, you could allow for an 11% stop loss, or even tighter if you want. You're right at the top of the range, so just put a stop just above those recent reaction highs. That's probably going to take you under 11% for your stop loss, so better than a 3-to-1 RR on that one. All right, next up, BTG. Another gold. This is a gold stock, and that wedge is, that is a very steep, very clean, bearish rising wedge. Just looks ready to pop any day now, and it's hard because the trend is certainly bullish. So as soon as I'm just waiting, guys. I mentioned that not too long ago. I'm just waiting to put on either Dust or Nugget or GDX or all of the above as short trades, but waiting for the right moment on these. But I can tell you the risk reward at this point is clearly skewed to the downside, because when all these wedges break, they're so steep that it's probably going to be a very fast reversal, a rush to the exits in the mining stocks. I don't know what catalyst will cause it. It might not even be a fundamental catalyst. It may just be a technical catalyst. We'll see. That was BTG. So here's SIL, the silver ETF. It's showing you this pretty much the same story. I don't have all, you can see the most recent divergence here. So this is a silver miners ETF, I should say. And there's your divergent high right there. And there's your primary uptrend line. So we'll set an alert just so I'm not sleeping when these things break down so I don't miss it. And we're almost done here. Had a question mark by this one. Let's take a look at it. Cheniere Energy, LNG. Yeah, it looks like a divergent high. This one's had a nice run off the lows. I believe we might have been long this one earlier in the year. And now we're at resistance. You can see pretty well-defined resistance. So there's a stock at resistance. This is support down here. Not one of my favorite, but some pretty large standing divergence. That divergence actually goes back, if you drew it out here, from this reaction high to this reaction high. And your short entry would be a break of there, but you have this support level to watch. If that support level goes and you're looking at a move, this is the next key support down here, all the way down to 3180. So, you know, if for those of you who are bearish, and I know there's quite a few of you in the trading room that think oil is going a lot lower and will stay lower for years, here's a 25%, 24% downside on this one to that support level. So that's LNG. Last one, this is still a setup on the site, trade setup. It has been for a while. I was waiting back then for a trigger of 149.25. I may revise the short entry. You have this uptrend line, and once that uptrend line breaks, I may have to also revise the targets. It's been a while. This one hasn't triggered any entry yet, but the divergences continue to build. We have, as you can see here, divergent high all the way to the most recent high, and the weekly chart confirms that this one is really at the tail end of a run. This is a defensive stock. I made mention the other day putting the Philip Morris or the Altera group, which is a former Philip Morris company. They split off. Now they have PM as one stock and MO as the other. Those are defensive issues, and these historically are where you want to flock when the economy slows down during a recession. But this market has been turned upside down, and we've seen distortions that we've never seen in the financial markets in history because of the zero interest rate policies. And what it's done, it's forced income investors, both individuals and pension funds alike, to chase yield because they're not getting it on fixed income instruments, on traditional fixed income instruments like bonds, government bonds, safe money instruments. So they're in junk bonds, they're in dividend paying stocks, and what happened is the defensive issues were bid up during this entire bull market to extreme valuation levels due to that zero interest rate policy. So what happens when the market finally rolls over? It'll be hard to see a huge rotation out of growth stocks into these defensive issues that are already overvalued. So that's the problem. In other words, they're going to collapse under their own weight at some point. There's just too much money into these stocks. They've been bid up, beyond any reasonable valuations, any long-term reasonable valuations. So they're probably not going to be a safe place to hide, or as safe as they were in recent years during the next downturn. So there's one to watch either way. There's technical cases made. Everything I just rambled about, that's a fundamental case. We'll see if it happens or not, but technically the levels are pretty well defined. And you can see. So I'll have to revise those again. I'll revise the entry, but I can tell you right now, let's move that line up there. There's a support level to watch. We've been dancing on that around 162.12. If that goes, we still need to see a breakdown of this trend line, and I may revise that as the official entry. A solid break, maybe even a daily close below that trend line. All right, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.